Well, good evening, ladies and gentlemen. I understand this is the last presentation of this evening before the Q&A, so I'll try and be as quick as I can. I think one of the bigger challenges for most of you here this evening, in actual fact, will be my accent. You may gather I don't come from this country. I'm actually born and bred in Scotland, but working in Brazil, so I'll try and keep my accent as clear as possible so that you can understand it as I go forward. Brazilian Gold Corporation. You can see from this picture, by the way, that where we're working in Brazil is an area that's already cleared of timber and of all the Amazon forest, unfortunately in some ways, but it's an area where there's no NGO activity. So in terms of working, environmentally and mining, there are no real major problems. You've seen that statement before. It basically says that what you're going to hear from here on in is just bullshit, so just bear with me as I get through it and you'll get a full grip of it going forward. Oopsie-daisy, let's go back one. Experience management. Well, of course you're going to hear me say that we've got the best management team, that we've got a group of people with sound international experience, etc., etc., etc. You must draw your own conclusions. All I can tell you is that I've worked in the gold business for some considerable time. When I started, I had dark hair, and now you can see the colour of it. I've worked with the majors such as Ashanti Goldfields, which is now Anglo Gold Ashanti, Goldfields of South Africa, and more recently I've had the success in the junior mining side, working in the uranium field in actual fact, and one little junior that may attract your attention was called Uramin. We took Uramin in 2006 from a market cap of 37 million and sold it in 2007 to the multinational company called Areva for $2.5 billion. So as you can imagine, as CEO, I was very happy about that particular outcome, and I'd like to think we could have a similar success here, of course, with Brazilian gold. In summary, well, a little company focused in gold in the Tapajós region of Brazil. The Tapajós region is known over the last 20 or 30 years for its alluvial working, for the artisanal miners that have been working there. They've extracted upwards of about 20 million ounces of gold from their routine basic mining structures. It was a very difficult part of the world to access, very difficult in terms of security, and very difficult in terms of road, rail, which there is none in actual fact, and in air access. That has changed and has made it possible for juniors like us to get involved, and also made it possible now for the majors who come behind companies like us to start sniffing around. And that's exactly what they're doing in the Tapajós region now. I can tell you that we're working we have the largest land package. We have over 400,000 hectares of land under our exploration control in the Tapajós region, and that makes us by far the biggest company in the area. And it also makes it very attractive for those majors when they do come looking, because what they need is a substantial and large land package that they can see the opportunity of major resources growing over and above what the junior has developed already. We're working in 5 main project areas. One is known as São Jorge, that I'll talk about in the next few minutes. A second one is known as the Surubim projects. The third one is Boa Vista, and the third one is Surubim projects, of which there's 2. The fourth one is Boa Vista, and the fifth one is, of course, Batistão, all in the Tapajós region. That's where we sit, right in the middle of it. It was difficult, as I mentioned, in the early days when I first started going, and I must be frank and say that I'm an African boy born and bred, to be frank. I spent most of my time there in different parts of that continent. I started going to Brazil in 2010. And of course, getting there in those days was a matter of getting on a plane and then progressively a smaller plane all the way up to the areas, because it was all small-scale mining. Nowadays, that has changed significantly. In fact, one of the key changes to us, and makes a big difference to our company and a big difference to every company that's coming forward into Brazil, is the fact that the infrastructure is dramatically changing in Brazil. This slide just gives you a highlight of the sort of properties we've got. I did mention we are the largest landholder, 400,000 hectares. It's an immense amount of ground that we have to cover. We're concentrated very close to a little town known as Novo Progresso. It was chosen deliberately in terms of where we started looking for the land packages. We picked up a lot of distressed companies at the beginning of 2010. I think you'll all be familiar with what happened in 2008 and 2009 in terms of the economic situation we all found ourselves in. So a lot of guys suffered. We picked them up relatively cheap, and then started developing hard with a lot of access going into during 2011 and now 2012. But we sit there, you can see the yellow package, that is the São Jorge package. Then there's a purple colour, which is the Surubim package. There's little green packages, which is the Boa Vista down to the south, and the other packages are individual packages of land that we hold throughout the area. We've only touched about 5% of the total exploration potential available to us. And when I tell you what we've achieved in that 5%, it will give you a flavour of just how much more there is to unlock in that particular part of Brazil. We're very fortunate. If you look at the top right-hand side of that particular slide, what you'll see is a fairly boring picture of a road. Well, it might be boring to you and I because we see it every day of our lives in countries like this, but in Brazil, that did not exist a year ago. It was a dirt road. And what that meant was that when you went travelling to that part of the world, it became inaccessible during the rainy season. And hence the flights had to get progressively smaller and smaller. Now with the road in place, 365 days a year we've got access. 365 days a year we can bring our material, our men, etc. to the site. It means exploration costs are low and the costs of development are equally low. Running parallel to the road is one other fantastic attribute that adds a lot of value to our exploration potential, and that is a power line. Once again, you might think, why is this idiot up there rambling on about a power line? But the alternative to having a hydro-generated power line is diesel generation. And I think all of us, particularly you guys here in America as well as us in the UK, understand what the cost of petrol is at the moment, or gasoline as I guess you call it over here. It is an enormous cost, and it means that if you have to generate power using diesel, it costs you 50 cents per kilowatt hour. To bring it in that hydro power line is less than 10 cents. So it makes the gold cost, the operating costs, much more competitive. And it means mines like ours can be brought in a lot quicker and a lot more simply. Novo Progresso is a town of 70,000 people. So instead of having a camp where you have to look after every single bit of that person's hygiene, that person's food, and that person's health, we actually truck in our guys just as you would in a normal first world country by road into the camp, take them back out at night. Again, dropping our operating costs low so that when we get into operation, we're competitive. Extremely important attributes, and just sets the scene for the next part of the presentation, which in reality is the strength of the assets themselves. And the ones we start with is St. George. When we looked at St. George, we liked it to begin with because it was close to that road, 3 kilometres away from the tarred road. It had drilling done by a company called RTZ, a large multinational company that some of you, I'm sure, will be familiar with. And so when we picked it up in 2010, we already had a base to start from. The first thing we did was, with the drilling that had been done, bring it into a compliant resource. Compliant resource means it was independently measured and you can put your trust in it. It's not done by me who could just put any number up that I wanted to some extent. It's checked, measured and double checked. That compliant resource was 900,000 ounces, only of which 470 was mineable. So when people talk about resources, do not get taken away with a large number. There's a fair chunk of it will never be mined. It's just completely inaccessible. So in this case, we started with 470, and what we created was a PEA, a preliminary economic assessment, that was positive at a $1,300 gold price. We felt it conservative but right to use $1,300. $1,500 might be achievable, but I think we've all seen the ups and downs of the market, so we felt to be on the right side of it, let's use 13. And we ended up with a very positive PEA, giving us an NPV of 100 million. But it was on a small resource. So having done that, we then started to step out the drilling. And we've done 14,000 extra meters of diamond drilling in this property. The output from that is there'll be a new resource coming out, again undertaken and completed by an independent engineer. It's called Coffee Mining, who are both Toronto and Australian based, a reputation that is without bounds in terms of the mining industry. Again, a name you can trust. They will have it out at the end of this second quarter, by the end of June, and the output we expect, and we have a pretty good feel for it, is that that mining resource of 470,000 ounces will double. So we'll be close to a mining resource or a mining inventory of just short of 1 million and a total inventory of over 1 million ounces. Now you can just imagine what that's going to do to the NPV. It means the NPV will kick up at the $1,300 gold price at a figure greater than $200 to $250 million. So the market cap of the company is not reflecting the opportunity that exists only in this project, St. George alone. And when I show you the next slide, you'll see where there's even more excitement to come in St. George. That's the old drilling picture. You can see where the garimperos or the alluvial miners had worked before. They've taken the upper levels, the top 30 metres, and the little chunk in the middle, which looks like a big swimming pool, is just the water that's filled in the small mining pit. We drilled to the east and to the west and extended the overall strike of the ore body. That's a vision of what the ore body looks like. It's pretty vertical, which means it's simple to mine from an open pit scenario. The stripping ratio runs about 4:1. For every ton of ore, you've got to mine 4 tons of waste. In today's average marketplace, that is not a bad ratio. Everyone would like it to be less, but that is not bad, 4:1. We think we can minimize it a little bit by tightening up the slopes, and we have reason to believe that we can tighten up to 55 degrees, but I won't bore you with what that means, etc., going forward. Added to the resource, of course, is the economics of bringing it out. Brazilian Gold has done a significant amount of metallurgical test work to confirm the recoveries and confirm the costs of taking it from the ground. In the next short while, if I could get my butt into gear, there's a press release that's due, and I hope it will be out by Monday or Tuesday next week, which confirms that the recovery of the gold in the ore is 92% to the gold bar. And 50% of that gold is in fact in the form of a gravity gold. Very cheap, very simple. You break the rock, you crush it, you mill it, and by its natural weight you separate it from the rest of the rubbish. It costs you no more than that. The other 42% comes from cyanide leach, which is a traditional method of recovering gold under most sulfide ore bodies. So 92% recovery, which happens to be slightly higher than what we use in the PEA, so a little bit of upside there. Over and above that, the second slide just confirms for you that we are moving forward with the power supply. There will be a letter of a memorandum of understanding signed between ourselves and the power supplier in the country, which guarantees that we will have power available for 2015 at between 8 and 10 cents per kilowatt hour. The capital cost of that power line, which is already built into my capital, by the way, ladies and gentlemen, is offset against the cost per kilowatt hour. So in other words, although I have to pay upfront capital, I'm getting it returned to me over the period of life of mine in a lowering cost per kilowatt hour. But the real opportunity is the fact that St. George itself is only the starting point of the known resource. I mentioned to you we drilled to the east and west of the ore body that had been defined by RTZ. So we took an 800-metre strike length into 1.4 kilometres. But as we undertook the work, and the method that we approached it to get the exploration targets was known as an IP survey, which basically is just an electrical current that comes back and indicates the sulfide mineralization. The sulfides carry the gold, so you know you've got gold there. What we picked up at the end of the drilling campaign is that the structure that we know as St. George at this moment actually extends a further 2.5 kilometres. So if you can imagine sitting just now, we've got plus 1 million ounces on the 1.4, then it doesn't take a rocket scientist to work out what we might find on the 2.5. So we have a significant chance of adding inventory to our existing resource and having a multi-million ounce deposit sitting here at St. George. The ground we hold is 40 kilometres by 30 kilometres. We have literally only explored 5 kilometres of that total length. So there is a huge amount still to come. And just before I leave St. George, there was one other comment. In Brazil, there's a lot of things going for it, apart from the fact they've got beautiful girls and play the beautiful game of soccer. They've also got a very appropriate fiscal regime. If I just slide back one at the bottom of that one, you'll notice that the income tax, the corporate rate of tax, is 15%. And for the first 10 years life of mine, there is no value-added tax on imported goods, whether capital or operating costs. A significant encouragement for getting going and to making us competitive in what is a competitive market in the mining sphere. So over and above that, what have we got? Well, our second target is at Surubim. Surubim sits about 30 kilometres away from St. George. So there is, again, synergy between both these properties. There are 2 targets in Surubim. This one known as the Patoa, Colonia and Tucanari target, and a second one known as Jau target. This one we like. We had first identified the primary mineralization earlier last year when we did our first stage drilling. We then infilled the drilling and confirmed for ourselves that instead of a single lens which had previously been identified, there was a series of multiple lenses, meaning that the mining thickness had grown from 20 metres to about 70 metres overall. And we liked that. We were very happy about that because it was a good target, running about 1.2 grams a tonne. But as we started to withdraw from the area at the end of the drilling campaign, our new geologist, rather than the old geologist, picked up a significant change. He looked at the upper levels of the drill holes that were coming back, and he found that the top 80 to 100 metres contain gold. And if you look at these sections, it's very hard perhaps to see in this slide, But the last two holes gave us roughly about 90 metres at 0.5 and another one about 80 metres about 0.89. Just less than 1 gram a tonne. And in a very simple, open pitable situation, there is no stripping, it's right on the surface. We suddenly realised we had an oxide cap. So we went back and analysed the previous drill holes. And again, if you go through these intersections that are highlighted there, you'll see that, first of all, it's not a one-hole wonder. There are holes that stretch over about 700 metres, and there's intersections of 88 metres at 2.6 grams a tonne, 80 metres at 2 grams a tonne, all right on surface. The excitement of that for us is such that we can move this into production at a relatively early stage. Obviously there's a permitting to go through, and I'll talk about that in a minute, but in terms of getting this running, it's a heap leach, low capital, high recovery, mostly free gold. And potentially sitting in there, and again you can do the arithmetic, we've got over 1.5 kilometres of strike at Patoa, we've got over 0.5 kilometre in width, and the thickness is 100 metres, and potentially it's running about 1.4, 1.5 grams a tonne. In Patoa alone, we think we've got 1 million plus ounces, and in Tucanari and Colonia, a further 1 million ounces. And we'll be drilling there to confirm that over the next 4 and 5 months. So fantastic target, but what's quality about it? Cheap, open pitable, simple mining, oxide cap, as well as the sulfide mineralisation below it. And the second target, and we bring this in for a different reason, I bring it in just to highlight the success that we've had as a company. This target, known as Jau, was completely virgin. No one had seen it before, no one had identified it before. We actually noticed it as we were going along the river. We saw the mineralisation on the side of the riverbank. The guys went in, did an IP survey. Our first drill holes went in March, April of last year. The second set went in the last quarter of last year. We've done 7,000 metres of drilling, and I'm delighted to say that this brand new discovery will be a compliant resource, 43101 compliant, by the end of this quarter, and will add a further 400,000 to 500,000 ounces to our mining inventory. Brand new discovery, and it sort of highlights the credibility of the team we're working with. And there's a second one that will also, I think, catch your attention. So we've got São Jorge, 1 million ounces of mining inventory, over 1 million of resource. Jau with 400,000 resource capability coming up, and we've got Surubim target that's plus 2 million ounces. So even in those two targets, we have the status of the growth for this business that we call Brazilian gold. But we have a third target, which is known as Boa Vista. It's the beautiful view, I guess, in Portuguese. And what that really means is that we've been working there since 2010. It was a joint venture. We were introduced to the project by a Brazilian partner who did the initial part of the exploration. We earned in by spending $4.5 million, and we are now the 61% owner of this project, going very rapidly to 71%. 61 is the official number. We've already spent enough to be up at 66, 67, but we'll be at 71, I think, roughly by the middle of the third quarter. The work that he undertook was pretty standard exploration techniques: IP surveys, soil geochemistry, trenching, the usual stuff, and he did 12 drill holes, and he identified 7 targets. One of them, known as Jair, you can see up on the left-hand side, is a reef that's currently being mined by a local mining company, a little small-scale one, producing, just by traditional methods, 15 ounces of gold every day. We let them work there because it's convenient for us. It's not our main target, but it highlights the kind of things we can find. There are 7 targets there. The one we focused in is known as VG1. VG obviously stands for visible gold. The guy walking over there picked up a bit of rock, and lo and behold, you could see the little metal that we all like glistening in it. So he did one drill hole, and that drill hole that was done at the end of April contained 102 metres from surface, grading 1.43 grams a tonne. When we became the operators, which was at the end of August, and there was the usual handover, messing around stage, that took us up to the end of, I guess, the middle of October. We started drilling again end of October through November into December. We've done 3,000 metres of drilling, and the press releases came out during February and March of this year. And what it confirmed, first of all, is a 2-kilometre target of gold anomaly. We've drilled just 700 metres, so just about a third of the anomaly has been drilled by us on 100-metre centres. We've done in total in this area probably about 4,000 metres, so nothing really. But we've done enough in a brand new target, found in less than a year, to identify another new discovery. This resource, again, has been confirmed by our external geologists, our independent guys, will be a compliant 43101 resource by the end of July of this year. An internal target, when you do the calculation, is 700,000, all from surface down to 200 metres. It's got a width about 150 metres, and it's got a true width in terms of depth of gold mineralisation of about 60 or 70. So again, the calculation gives you the number in resource coming up, 700,000. And remember, it's only 1/3 of the anomaly. So we are desperately waiting. We're champing at the bit to go back in there and do some more drilling because there's more to come. But Boa Vista, a brand new discovery, the second one, adds to that growing inventory in Brazil that we have. And when I again explain to you the size of what our footprint is, you can see just how much more there is to come. There's another target, well, that's just another highlight of Boa Vista, and I'm moving on. There's another target called Plan Alto, 3 kilometres long, 2 holes in it. We found gold. We just haven't found the sweet spot yet, but there's more to come. Boa Batistão, 5th target, drilled previously by an Australian company called Western Mining. We stuck 4 holes in it. The results just came out on Monday for 2 of them. 44 metres at 1.1 gram a tonne from surface, and the other one 26 metres at 1.7 from surface. So we're waiting fairly hungrily for the last 2, which are deeper holes, by the way. So finally, why Brazil? Well, I think most of you are probably aware of all the traumas going on worldwide, whether it's Africa or whether it's even parts of South America. Argentina was mentioned earlier this afternoon. You know what's happening in Venezuela, Bolivia, etc., etc. Africa takes 30% of your company, whether you like it or not. Brazil is stable. It's got a World Cup coming up. It's got Olympic Games coming up. Optically, that country is going to remain stable. It's a growing economy, one of the world's largest now. I think it's overtaken Britain in terms of size of the economy as well. So it is becoming a major player on the stage. Infrastructure developing as fast as you can blink an eye, making operations, making growth simple and opportunistic at this time. There is no doubt the majors are coming into that area because it's now reached that level of maturity. We like it because of that fiscal stability. We like it because of the exploration activity. The little company itself, we're Brazilian Gold Corporation. We're listed in TSX. We have 100 million shares out there, fully diluted. We've got 110 million shares. We raised last year, one hit, with no warrants, straight through, $23 million. We used 17 plus of it on the exploration to date. We sit in our company, as you can see, at the end of the year there with $9 million in the kitty. We are not short. We will not be going to look for money. This is a growth opportunity where the share price should accumulate. When we raised the money, we were trading at 140. All we've done is add value from that day on.